If you've ever looked at the stock market and thought, this seems complicated, you're definitely not alone. For many beginners, buying stocks feels like something reserved for Wall Street professionals, finance experts, or people with years of investing experience. But in 2026, that's no longer the case. Platforms like eToro have made investing more accessible than ever before. With just a smartphone or laptop, you can buy shares of some of the biggest companies in the world, track your investments in real time, and even sell your stocks whenever you decide it's the right moment. Whether you want to invest in technology giants, dividend-paying companies, growth stocks, or simply learn how the stock market works, eToro provides one of the easiest entry points for beginners. In this guide, I'm going to walk you through exactly how to buy and sell stocks on eToro step by step. We'll cover account setup, funding your account, finding stocks, placing trades, understanding different order types, and finally how to sell your investments when the time comes. By the end of this video, you'll know everything you need to start investing confidently on eToro. Before we jump in, remember that investing always involves risk. Stock prices can go up and down, and there are no guaranteed profits. This video is for educational purposes and should not be considered financial advice. Now let's get started. The first step is creating your eToro account. Head over to the eToro website or download the eToro mobile app from your device's app store. Once you open the platform, click the Sign Up button. You'll be asked to provide some basic information, including your username, email address, and password. Alternatively, you may be able to register using your Google account, Apple account, or other supported sign-in methods, depending on your region. After registration, eToro will ask you to verify your identity. This is a standard process required by financial regulations and helps keep the platform secure. Typically, you'll need to upload a government-issued ID, such as a passport, driver's license, or national ID card. You may also need to provide proof of address, such as a utility bill or bank statement. The verification process can take anywhere from a few minutes to several days, depending on demand and your region. Once your account is approved, you'll gain full access to the platform's investing features. One of the great things about eToro is that it offers a virtual portfolio. This allows beginners to practice investing with virtual money before risking any real funds. If you're completely new to investing, spending some time in the demo account can be incredibly valuable. You can learn how stock orders work, test strategies, and become comfortable with the platform without risking your own money. Once you're ready to invest with real money, the next step is funding your account. Inside your dashboard, look for the Deposit Funds button. eToro supports several funding methods depending on your country. These can include bank transfers, debit cards, credit cards, online payment systems, and other regional payment solutions. Choose your preferred payment method and enter the amount you'd like to deposit. Before depositing, it's important to consider your investing budget. One of the biggest mistakes beginners make is investing money they may need in the near future. Stock investing should generally be viewed as a medium to long-term activity. Many experienced investors only invest money they can afford to leave untouched for several years. Once your deposit is complete, the funds will appear in your available balance, and you're ready to start buying stocks. Now comes the exciting part: finding stocks to invest in. On eToro, you can search for stocks using the search bar located near the top of the platform. Simply type the company name or stock ticker symbol. For example, if you're interested in Apple, Microsoft, Amazon, Nvidia, Tesla, Meta, or other major companies, you can search for them directly. When you click on a stock, you'll see its profile page. This page contains valuable information, including price charts, recent performance, company details, analyst insights, community discussions, and various statistics. Before buying any stock, spend some time researching. Many beginners buy stocks based solely on social media hype or headlines. While exciting stories can attract attention, successful investing often involves understanding the business behind the stock. Ask yourself several questions. Does the company have a strong competitive advantage? Is it growing revenue and profits? Does it operate in an industry with long-term potential? What are the risks facing the business? What is the company's valuation compared to competitors? These questions won't guarantee success, but they can help you make more informed decisions. Once you've selected a stock you want to buy, click the Invest button. This opens the trade window. Inside the trade window, you'll typically have two main choices. You can invest a specific amount of money or purchase a certain number of shares. For example, if a stock costs $200 per share, but you only want to invest $50, eToro's fractional investing feature may allow you to buy a fraction of a share rather than a whole share. This feature has made investing significantly more accessible because investors no longer need hundreds or thousands of dollars to gain exposure to high-priced companies. Next, enter the amount you want to invest. Take a moment to review the details carefully. Check the stock symbol, check the investment amount, make sure everything looks correct. You'll also see optional risk management tools such as stop loss and take profit settings. A stop loss automatically closes your position if the stock falls to a certain level. A take profit automatically closes your position if the stock reaches a specified profit target. These tools can help manage risk and automate parts of your investing strategy. After reviewing your order, click Open Trade. Congratulations, you've just bought your first stock on eToro. Your investment will now appear in your portfolio. The portfolio section acts as your investment dashboard. Here you can see all your active positions, including your purchase price, current market value, unrealized profit or loss, and overall portfolio performance. One important thing to understand is that stock prices fluctuate constantly. It's completely normal to see your investments move up and down from day to day. Many new investors panic when they see a stock decline shortly after purchasing it. Market volatility is a normal part of investing. Even the most successful companies experience periods of decline. The key is focusing on your long-term strategy rather than reacting emotionally to every price movement. Now let's discuss different order types, because understanding these can help you become a more effective investor. The simplest order is a market order. A market order buys shares immediately at the best available market price. This is the most common choice for beginners because it prioritizes execution speed. However, there's another order type called a limit order. A limit order allows you to specify the maximum price you're willing to pay. For example, if a stock is currently trading at $100, but you only want to buy it if it falls to $95, you can place a limit order at $95. The order will only execute if the stock reaches your specified price. This gives investors greater control over entry points. Understanding the difference between market orders and limit orders is an important investing skill. Now let's move on to selling stocks. At some point, every investor will need to decide when to sell. Selling is actually one of the most challenging aspects of investing because emotions often play a significant role. There are several reasons why investors sell stocks. Some sell because they've reached their profit target. Others sell because they need cash for another purpose. Some sell because the company's fundamentals have changed. Others rebalance their portfolios to maintain proper diversification. Whatever your reason, the actual process of selling stocks on eToro is very straightforward. First, open your portfolio. Locate the stock position you wish to sell. Click on the position. You should see options related to managing that investment. Select Close Trade. Before confirming, review the details carefully. The platform will display your current profit or loss based on the market price. If you're satisfied with the transaction, confirm the closure. Once completed, your shares are sold and the proceeds are returned to your available account balance. At that point, you can use the funds to purchase other investments, keep them as cash, or withdraw them depending on your goals. One common question beginners ask is whether they should sell a stock after making a small profit. The answer depends entirely on your investing strategy. Many successful long-term investors hold quality companies for years or even decades. Others actively trade and capture shorter-term price movements. Neither approach is automatically right or wrong. The important thing is having a clear plan before entering a position. Without a plan, emotions often take control. Fear may cause you to sell winners too early. Greed may cause you to hold losers too long. A disciplined strategy can help reduce emotional decision making. Another feature worth mentioning is diversification. Instead of investing all your money into a single stock, many investors spread their investments across multiple companies and industries. Diversification helps reduce risk because poor performance from one investment may be offset by stronger performance from others. For example, rather than putting your entire investment into a single technology company, you might own stocks from technology, healthcare, consumer goods, energy, and financial sectors. This creates a more balanced portfolio. eToro also offers access to exchange-traded funds, often called ETFs. ETFs contain collections of stocks bundled into a single investment. Many beginners use ETFs as a way to achieve instant diversification without researching dozens of individual companies. As your investing knowledge grows, you can decide whether individual stocks, ETFs, or a combination of both best fits your goals. Another useful feature on eToro is copy trading. Copy trading allows users to automatically replicate the trades of selected investors on the platform. This feature has attracted many beginners because it offers a way to learn from more experienced traders. However, it's important to remember that past performance does not guarantee future results. Even successful investors experience losing periods. Always research any investor thoroughly before allocating money through copy trading. You should understand their strategy, risk level, trading history, and overall approach. Risk management is another topic every investor should understand. One of the most important principles is position sizing. Never invest more money into a single stock than you're comfortable losing. Even strong companies can experience unexpected setbacks. Many investors limit the percentage of their portfolio allocated to any one position. This helps prevent a single investment from causing significant damage to overall portfolio performance. Patience is another critical investing skill. The stock market often rewards long-term thinking. Many of the world's greatest investments looked ordinary in their early years. Investors who remained patient through market fluctuations often benefited from compounding growth over time. Compounding occurs when your investment gains generate additional gains. Over many years, this effect can become incredibly powerful. This is one reason long-term investing is frequently emphasized by experienced investors. It's also important to avoid constantly checking your portfolio. While monitoring your investments is reasonable, staring at price movements every few minutes can lead to emotional decisions. Successful investors often focus more on business performance than short-term stock fluctuations. If the underlying company continues executing well, temporary market volatility may matter less than many beginners assume. As you gain experience, you'll likely develop your own investing style. Some investors focus on growth stocks. Others prefer dividend-paying companies. Some seek undervalued opportunities. Others invest through index funds and ETFs. There is no single perfect approach. The best strategy is usually the one you can consistently follow through different market conditions. The key takeaway is that eToro makes buying and selling stocks relatively simple, but successful investing still requires education, discipline, patience, and proper risk management. The platform provides the tools, but your long-term results will depend on the decisions you make as an investor. To quickly recap, create and verify your eToro account, deposit funds, research stocks thoroughly, select your investment, place your order, monitor your portfolio responsibly, and sell when it aligns with your investing strategy. Remember that investing is a journey, not a race. Focus on continuous learning, stay disciplined, avoid emotional decision-making, and think long-term whenever possible. If you found this guide helpful and want more tutorials covering investing, trading platforms, personal finance apps, and money-making strategies, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss future content. Thanks for watching, and I'll see you in the next video.